Kitco Mining's special coverage of Fastmarkets lithium supply and battery raw materials is brought to you by Lindian Resources.
Did lithium set a bottom this spring? Matt Fernley thinks so. Matt is the managing director of Battery Materials Review. Matt, welcome back to Kitco.
Well, it's good to finally meet you in person, Michael. I've spoken so many times, but never met.
Likewise, good to see you here at the show. Let's talk about bottoms for lithium prices. So back in the spring, according to Reuters, the spot price slumped 70% between November and a low point in April. Why do you think that the bottom is in for lithium?
Yeah, well, I mean, as we discussed last time I was on the show, unfortunately you weren't here, but Paul was there. But I think it's all about the cost curve.
Yeah.
And, you know, if you think about the lithium market in 2018, it was a really small market. It was dominated by the Latin American brines and the Greenbushes hard rock. Very low cost operations. They had to operate, you know, in a low cost environment for a long time. But if you look at the industry now, 2022, it's 2 or 3 times the size. A lot of new operations have come on, and particularly the issue here is that the non-integrated operations. So the spodumene converters in China that buy their material from Australia, they don't have captive mines, and it's completely changed the structure of the industry. So, you know, in 2018, the cost curve would have been about $7 a kilogram. By 2022, the cost curve was much closer to $35 to $40 a kilogram because of this non-integrated exposure. And then what we saw is that the prices bounced off the marginal cost of production. So the marginal cost of production was about $30 to $35 a kilogram, and actual prices bounced off that level in this cycle. We obviously saw a drop in cell production and EV production into the back end of last year and the beginning of this year, and that sort of led to a build-up of inventories. Prices collapsed, but then they bounced off that marginal cost of production level. And it's really interesting here to differentiate between the 2 types of lithium, so lithium carbonate chemicals and lithium hydroxide chemicals. And what we see is that the lithium hydroxide market, and that's the material that goes into the high quality ternary batteries, NCM 811, the high nickel batteries, that's primarily Western cars, and that market is very, very tight and has been very, very tight all the way through. Whereas the lithium carbonate market, which primarily goes into the 5 series ternary batteries and NFP, and is primarily a China event, that market got a bit stodgy. And what we've seen overproduction in NFP batteries, so inventory build, and overproduction in lithium carbonate and inventory build. So we really are looking at a 2-tier market here. But whether you look at a 2-tier market or not, when you combine the market, the marginal cost is around about that $30 level. So, you know, what we're seeing now is stronger demand starting to come through. There's seasonal support, seasonal trend is coming through. And we expect the lithium price will continue to rise over the next sort of 3 or 4 months or so.
Going to copper, copper is really kind of driven by what's happening in the economy. It does spike off of what is going to be happening with disruptions in it, but it is a very, it's a very well-produced metal. But Dr. Copper, again, it's assessed in terms of what's happening with the economy right now. I'm guessing that lithium, just because the demand is ramping up so much, and because you have, how would you say, more concentrated and more limited supply, we're probably going to be looking at more volatility over the medium term.
Yeah, I mean, lithium is a tiny market compared to copper, and also different drivers. So if you look at copper, major drivers of copper, manufactured goods, like cars. So other manufactured goods, it's much more broad than that. And also infrastructure, property development, things like that. So I think copper is what we call an industrially leveraged metal, and it moves in industrial cycles. I think lithium is exposed, for instance, to the Chinese consumer, but outside that, it's not so what we call industrially leveraged, because there is this big spot price component in China, and that is going to make it much more volatile than perhaps the big industrial metals like copper and zinc, which are more stable. I mean, we have seen a lot of volatility recently on the LME prices and COMEX, but not to any extent the same as what we see in the lithium market, where, prices can zip around 5-6% in a day on the spot market. Now, important to differentiate here and say that the spot market is still a relatively small percentage of the lithium market.
Yeah.
And the big bulk of the lithium market is quarterly pricing contracts between producers and consumers.
Doing research for this show, I've been listening to your commentary as well as listening to people in Fastmarkets, other analysts as well too. The word that keeps on coming up again and again is ESS. If you think EV is important, hold onto your hats. ESS is coming. Or what's ESS, man?
So ESS, energy stationary. I'll try that again.
Yeah.
ESS, energy stationary storage. What that basically means is batteries that sit alongside power producers. So we're talking about batteries that sit alongside utility scale renewables projects, batteries that sit alongside commercial scale renewables projects, and also residential storage batteries, which are increasingly going in now alongside home solar panels. And it's a hugely exciting business. It's growing off a very low base, much lower than EVs, but it's growing much more rapidly. And some commentators, us included, actually believe that the ESS market has the potential to be bigger than the EV market by 2040. So we are talking about potentially a very significant market. And we've all seen a lot of interest in stationary storage starting to pick up over the last 12 to 18 months in the US. Residential storage has been really a very fast-growing market for the last 3 or 4 years. But I think people are not aware of what's happening in China and in India, where we're seeing huge investments in renewables and storage to sit alongside that. And, we have to look at Battery Materials Review. I have to look at my ESS forecasts. I'm likely to take them up again before the end of the year. And that's going to have implications for my lithium demand, supply-demand balance as well.
Well, to help me out understand here, one of the common themes that you see also running with analysts is that there's some new tech that comes up within the space. So, and the latest one happening right now, of course, is the sodium ions right now. I think broadly the argument against that, though, and help me flesh this out here, is that, look, the industry is growing so fast with both EVs as well as what we see also with ESS. There's just going to be needed a whole bunch of material for this, because there's going to be so many different applications and there's going to be so many different niches that this thing is going to fit in. So there's going to be room for sodium ion, but there's also going to be room for everything else. And then also just inertia in terms of what actually has been built in. The fact is that all of the lines have already been set for actually doing lithium ion over the medium term right now, that yes, there's a lock. We still need all of these materials.
Yeah, I think one of the problems in the industry is there's a lot of noise around new technology, but the new technology that's being talked about is not necessarily commercial technology. A lot of it's in the sort of experimental or the rollout stage. So, a number of new techs have been around really for as long as I've been involved in the space. Solid state, people have been talking about solid state being around the corner for the last 5 years. It hasn't got any closer. Sodium ion's been around for 15 or 20 years. So sodium ion's not a new tech. And, there have been a couple of breakthroughs that have sort of brought that forward. And I do think sodium ion is going to be a viable tech in the industry, primarily for energy storage, ESS, but also perhaps for small EVs as well. And there is a market for ESS and small EVs in China. But looking at the magnitude of the growth that we see in the industry, as you said, there's space for everything. And at the moment, I don't see sodium ion taking a huge market share off lithium ion, certainly not in the EV space. And the reason for that is it comes down to the energy density of the battery. Energy density kind of equates to range in layman's terms. So the problem is that the energy density of sodium ion is just not high. So if you look at the three types of battery, there's sodium ion, that's got the lowest energy density. Then there's LFP, lithium iron phosphate batteries, which is a mid-tier energy density. And then there's the high nickel ternary batteries like the NCM811 and NMX and other types of batteries, which have got a much higher energy density. And basically, there's the view that sodium ion could compete with LFP around the margins. But the new technology around LFP is more in manganese. So if you add manganese to LMFP, the energy density is much higher. And the problem is that the sodium ion just can't really compete with that. So it can run with small vehicles. It's very viable for stationary storage. But is it going to be in premium electric vehicles? No, probably not.
Help me out. I'm wondering if the story of the year in 2023 was the Chinese EV market. It just seems to be really running ahead right now. You look at BYD, its plug-in hybrids plus its EV sales were, I think, 100,000 greater units than Tesla. At least in Q1. We see the announcement today. It's June 21st. They announced that they're going to be extending 4 years. China is going to be subsidizing and provide tax breaks for new electric vehicle purchases. We also see about BYD, just its very aggressive stance in terms of actually growing global exports right now for electric vehicles. Top story, important story for critical minerals?
Yeah, I mean, I think it's, China's EV market has been the driver of the last couple of years. I mean, 2018, China was the leader. Now China is the leader.
Yeah.
The European market grew quite rapidly. 2019, 2021 has slowed. And the US market kind of atrophied from 2018. And now we're starting to see interest come back into the market, but the US has got a lot of catching up to do. So, in terms of the market maturity, the Chinese EV market is a long way ahead of the other Western world markets. And we see that in terms of the huge range of vehicles. So, we've got mass market vehicles in the Chinese market that sell at $10,000 or $15,000 a unit. We've got premium vehicles. We've got different technologies, different battery technologies. And I think that is very, very important. And the Chinese EV makers, I think, have got a very, very good product. And they're going to start exporting, or they've already started exporting to Europe this year. And I think, the point that you made about Tesla is very, very important, because Tesla's got two great models. Mm-hmm. But the point is that BYD's got 30 models. Mm-hmm. And it's the fact that BYD is a big company with different models with different applications for different people. Mm-hmm. And that's what's allowing them to go ahead of Tesla. And in fact, we're seeing that broadly across the Chinese market, whereby, companies that have got models in different demographic areas or different usage areas are competing very well. Tesla wipes the floor in terms of market share in its core markets, but it just doesn't have enough products to compete with the big OEMs.
Mm-hmm. I think your co-host also made the point as well, too, that BYD goes further down the stack in terms of owning in silicon, and then also that is able to refresh its models far quicker than what Tesla is doing as well.
Yeah.
Just looking ahead, it is end of June here right now, or near the end of June, at the Fastmarkets show. What are you looking for the next 6 months in the lithium space? What are going to be some key trends? I mean,
I think lithium obviously is the material that's most in focus at the moment. I'm looking for re-acceleration in Chinese cell manufacturing, re-acceleration in Chinese EV sales. I mean, it's obviously been much stronger over the last couple of months. Supply is also very much in focus. We're certainly seeing more material coming out of Africa in the spodumene concentrate than we're expecting, but also a cost curve. And, we're starting to see costs run away in some of these startup projects. We're starting to see production delays coming through. Just the complexity of the industry is, I don't think, well appreciated by outsiders. And then we're looking to sort of push into some of the other areas like graphite, high purity manganese, nickel. I think ESG is very much coming to the fore. And there's certainly been some ESG failures among the Western world OEMs recently, and it would be very interesting to see, whether they look to reverse that. So I think there's lots of things happening in the industry, but obviously the one that drives stocks is prices. And so we're keeping a very close eye on what the Chinese EV sales is doing. Most importantly, the Chinese cell manufacturing, and as importantly, what inventory levels are looking like through the system.
Lastly, Matt, how can people follow you? How can people follow your research?
Yeah, batterymaterialsreview.com is my site. It's a subscription newsletter. I publish occasionally on LinkedIn, or obviously also on Kitco as well.
And Matt, pleasure seeing you in person.
Good to meet you. Thanks very much for the invite.
Okay. My name is Michael McRae here at Fastmarkets 50th Lithium Supply and the Battery Materials Review show here in Henderson, Nevada.
Kitco Mining's special coverage of Fastmarkets Lithium Supply and Battery Raw Materials is brought to you by Lithium Resources.